So it's currently about 2.5 trillion. If I look at all the other asset classes around the world, equities, bonds, real estate, they're all between 250 and 350 trillion. If I look at the total derivative market, it's 1 quadrillion. I think there's a reasonable chance of this being a $250 trillion asset class, which is 100x from here, which would be the largest growth of any asset class in all history in the shortest period of time. That will pretty much dovetail in with the idea that 3.5 billion people are using it by, that's just extrapolating the growth numbers of the network. So if 3.5 people are billion users in 2030, well, the market cap's going to be something like 250 trillion. Yeah, it all kind of backs out pretty straightforward, just using network adoption models. I think we're probably, because of the new entrants into the market, the downside will be less big in the major cryptos. It'll still be huge in the more risky stuff. And I don't know the format of where we go, whether we keep going that log trend and we keep hitting the bottom of it in a sharp sell-off like we did this year, down 50%, then back up again, or whether we do a down 50, down 40 and trend sideways for a year. I think we'll see both of those types of price actions. So, but I don't think we get the down 80, 90. I don't think that's applicable in the market as deep as this now.
Everyone talks about these Ethereum is going to flip, Bitcoin in market cap. What's your take on that?
Yeah, but who cares?
They're flipping it.
I mean, who cares, right? They're two different things.
Yeah.
It's ridiculous.
Yeah.
So they're two different things. I think the application growth of the network of Ethereum is currently miles larger than Bitcoin, and therefore ETH is still undervalued versus Bitcoin. But ETH will lose market share to others. And it's the whole space will go up 100x. And nobody should care what's the largest thing here. It's the whole space we're interested in. And Ethereum is a richer, deeper environment with more participants in the network. So it's going to be slightly more resilient at this point.
Exactly.
And that's okay. And again, people take this flippening as like, oh, well, Ethereum's now a better cryptocurrency than Bitcoin. None of us think in those terms. It's just, it's like comparing Apple and Amazon. They're just different businesses. I think Bitcoin should focus on one thing, and that should be flipping in gold. If that's the narrative for Bitcoin,
that's the real flippening, right?
That's the real flippening, when Bitcoin is perceived to be a more valuable asset than gold. And that's not a million miles away. Yeah, I don't think fiat currency goes away. Once you've got central bank digital currencies, the fiat system will be fast. Why you use the fiat system is because that's where you pay your taxes and pay for many of the regular goods and services. So it's like the fact that if you want to be in NFT world, you generally have to use ETH. It's people really overcomplicate it. It's the social token of Brazil. You've got your currency, and that's what you have to use if you want to operate within Brazil. Now, we're going into an interoperable world, so you can buy stuff with ETH within Brazil if you wanted to, but your general larger interactions are with the domestic currency. It's no different in this whole Web3 world. There's just more currencies. Now, that does incentivize governments to treat their currencies better.
Do you think that finally USA will have the spot ETF in 2022?
I don't see why not, but who the hell knows, right? These regulators are crazy. How can you possibly say you're trying to look after consumers and then you put them into a futures contract? Right? If you think about this, right? If the average investor in the US went to buy the Bitcoin futures contract, they would not be allowed, because you need to understand the risks you're taking. But you put that into an ETF and suddenly you can do it because, you can't take the leverage. But it's not just about leverage. It's because futures contracts are not necessarily tied to the underlying at all times. So we're already seeing a massive underperformance of the Bitcoin futures ETF. So you're screwing over consumers because you think you're saving them. Now, a spot vehicle with no leverage is clearly a better vehicle once you've got the right custody mechanism in place. That's it. It's crazy. I don't buy that. And I don't buy it because they regulate the derivative markets. And they're immensely complicated. And the credit markets and all of this stuff, they just don't want to do it because they see it as a threat. And they've got a bunch of banks and intermediaries telling them, we don't want this. Mm-hmm. Because like if you do the futures contract, you're actually spreading money around to the whole industry because the banks can arbitrage it, the hedge funds arbitrage it. You've got futures clearing agents, settlement, all of this stuff is money back to the incumbents. But if you own Bitcoin physically, there's very few people in the middle for the ETF. And this is, I just don't believe they're doing it out of the purity of their own motives. And I don't believe they can't get their heads around it because they've got their heads around some very, very complicated things, right? It's ridiculous to need the level of decentralization that Bitcoin has for certain things. Mm-hmm. And we've seen this, once you move, the further you move away from decentralization, the faster and cheaper it is. It's a trade-off. Everything in life is a trade-off. Now, some people, it matters more than anything about their Bitcoin decentralized. Great, go for it. But that's not the real thing. Is the distributed nature of the participants, the ownership, the co-ownership of the network, however broad that is better than not at all. Mm-hmm. And yes, Bitcoin is the largest in that way. I just don't think it's everything here. People are getting confused looking at all of these other tokens, protocols, and trying to compare them to Bitcoin. How decentralized is it? Well, we're not talking about creating a base layer of money here. We're talking about a bankless DAO token to coalesce a group of people. It's a different thing. I have a few NFTs just to figure it out. I think NFTs are still hugely risky to know what community you're part of. Is that community going to be anything? So I've got this Affen mit Waffen, which is German for guns with apes, apes with guns, which is one of the guys who started the Real Vision bot, started a community around these things that are based on sentiment of Real Vision interviews. Oh, nice. And each one has a story. One comes out every day. So there's only ever going to be like 250 of these things. And basically it's a bunch of Real Vision fanatics and others. So I've got a couple of those because I want to see where it goes. I mean, and they go up in price a lot, which is quite amazing. I mean, they're not massively valuable, but they're like 5, 6, 7 ETH now. But I'm interested to watch what that community does. Real Vision's just launched an NFT that is attached to this new pro crypto tier, the research tier, again to create community around. I'm not and I was given an NFT. Other than that, I'm not a collector. I'm really interested in the community variation of this right now. I get NFT art, but just not my thing particularly.